What's going on, everyone? Shalon Winter here, aka Futures Sniper Beast. So this video here is going to be how I framework my morning, or how I set up the framework every single morning before I trade. And I've gotten a lot of questions on how I do that. What do I do? What are these levels? Those things, especially since I've started live streaming and they're there already, because what I do is before I start trading, if I know I want to start watching the market at a certain time, at least 10 minutes before, I go through and I set up my framework for the day. So I have a very set time frame that I like to trade, that I look for an entry, and if I don't get my entry in that time frame, I'm out. I'm done. I don't trade anymore. I don't look for a trade, nothing like that. So during that time frame, I set up a framework of what I'm expecting, what I think could happen, and what I'm seeing on the chart. That way I know exactly what I'm looking for during that time frame. And if I get it, great. I can take it, no hesitation, and be comfortable, feel good about the trade. And if I don't get it in that time frame, I feel great also because it wasn't there. It didn't fit in my time frame, in my framework, I mean. So I'm going to show that. Now, however, I don't want you to get it confused and think that I'm teaching you how to trade or teaching you how to trade with ICT concepts. This is just how I frame out my morning, right? You still have to learn ICT concepts. You still have to take the time. You have to study. You have to go through the mentorships, whatever, however you want to do it. Okay. You still have to do that. You have to know how it works. I'm not teaching it. I'm just showing you my framework. This is my framework. And the beautiful thing about it is once you know the framework, you know how price should move, where price should go. You can essentially trade it however you want. There's no right and wrong way. If I know it's going to get, to this level and price is down here, it doesn't matter what you do to get in, as long as you get in the correct way, right? It's that simple. But then the next steps are the money management side. At what point do I get in? How much do I risk? At what point do I stop taking trades? Stuff like that. That's a whole nother ball game, a whole nother video, which I do have some risk management videos already. But I just wanted to preface this video before I dig into the framework, how I set up my framework, all that good stuff, is I wanted to make that clear. I am not teaching how to trade ICT. All right, this is just my framework. So if do me a favor, if you find value out of my streams, out of my channel, out of any of my videos, hit that like button for me, share it, and make sure and subscribe. And come join me on my live streams. It's a lot of fun. So, all right, let's jump right into it. Okay, so when I get started on the day, let me scroll back here. Actually, it doesn't matter where we are. When I get started, I like to have a blank canvas every single day. And the reason why I do that is because, yes, what I could do is lock some things on the chart, leave them there for the next day. They do have indicators that automatically mark certain areas on your charts. They have all that, especially in TradingView. You have a ton of indicators here. So there's a few that I've highlighted that I've used and looked at before when I was first learning. That would be these here. So if you want to pause and take a screenshot and check these out. But I don't use them. So you can. However, here's why I don't use them. The reason is because I like to come in, and when I go through the chart and I set up my framework and I'm looking at everything, that's tuning me into the market. That's setting up my mind. That's basically aligning me with the market. And that's why I do that. And then plus I like to manually do this every single morning also because I don't want to miss anything. So like, let's say I mark a level the day before or have it auto marked. Well, I might not pay attention to it. Like, yeah, it might be on my chart, but if I didn't actually, say something about that level, then I might not even notice it, even if it's on my chart. That's just, I like to bring attention to everything. So when I get started, basically, The first thing I do is I go to my daily chart. So I'm going to check out the daily chart. Okay. And one second. Okay, here we go. I don't know why it was showing like that. So I go to the daily chart, and you see the daily chart is where if I am going to leave anything there, it'll be the daily and up, the daily, weekly, or monthly. And the reason why is because that doesn't change on a day-to-day, right? But I still look here on the daily chart to see what's going on. So I go in here, and I want to see, are we bullish or bearish, right? For the day, or not for the day, but overall. And obviously you can see we're pretty bullish, right? So I want to see everything is fractal. So for example, when I'm watching and I'm looking here, right? Like let's just say we have a low, high, low, right? We have this kind of action going on, right? And then we took these lows here and made a higher high. So right here, when we displace through highs with leaving a fair value gap, that's an indicator that we're going to remain, for me, I'm going to remain bullish until this gets inverted. Basically trades through and closes underneath this area and takes this low. Until that happens, I pretty much remain bullish. So, or now in this case, so that was back then. So in this case, we came up, pulled down, took these highs. Now, when we took these highs, did we have a fair value gap? Did we have some displacement? So yes, we have a fair value gap. So I'm going to remain bullish until this gets taken and this low gets traded through. And then these lows get traded through. And then we start to see a shift. So I just kind of have that in mind. That's what I look at on the daily chart. Okay, so just to kind of have that in my mind. Now, what I do here on the daily chart is I want to go and like this was today. I want to go and I'll mark the highs and lows of the day before. So here, I'll mark the high and I want to mark the low. Okay, so it'd be yesterday high, yesterday low. Those are areas I want to see. And oftentimes I'll do that up to 3 days. So the day before and then 2 days after that. So this bar and this bar, highs and lows on each one. And it depends on where price is. If we're really far away from, a couple of these bars, then I might not mark it, but I always want to know where they are. So that's what I'm marking on the daily chart. Okay, so I mark those. I'm just going to leave them. So I'm going to go through this kind of like if I would, any other morning. So I'll mark that. And then I notice there's a fair value gap here, right? So when I notice that fair value gap, because Tuesday this bar closed. So Wednesday morning when I'm looking, I notice there's a fair value gap. So I mark this right here, this fair value gap. Okay, I have it locked, but then I have it here. I mark it. And that's it. That's there. So, because I know when price draws up, eventually it'll come back down to this at some point. We'll see when. Okay, so for example, tomorrow morning, when I look and see the same thing, I'll notice this volume imbalance right here. And I'll go in, same thing, and I'll mark this volume imbalance right here until price trades through it. Okay? We just made a new all-time high today. So tomorrow or Friday is NFP. There's a good chance price could come back through and trade through that. We'll see. So that's what I mark on the daily chart. And then if I see some obvious sell side liquidity or buy side liquidity, I'll keep a note of that. So like here, we have a lot of smoothness here. Let me zoom out a little bit. Right here, there's a lot of sell side liquidity under here. Then you have some more under here. And then yeah, so those are obvious areas right here, especially this area. Okay. I'll kind of take a note, and sometimes I'll put even a level that says, like a long-term short long-term low for the daily chart. Sometimes I'll note that if we're really far away from it, like we are right now, we're 1,500 points away. I really don't have a reason to do that because I like to keep it clean. And since I check it every day, if price comes back down, I will notice that. I'll see it, right? So then I do this once a week on Mondays, basically. Monday, I'll go to the weekly chart. The bar before, I'll mark the high and the low of the previous week. I'll mark the high and the low of the previous week. And it's the same thing. It's the same thing because it's all fractal. I'm looking at the same things. I noticed, oh, there's a weekly volume imbalance right there. I'll mark it. Do I expect price to come to it right away or anything like that? No. The reason I mark it is because if price does come back down, and if you've been on my streams at all, part of my streams is I mention on there all the time that any trade I take, I need a target. Plain and simple, I need a target. So, for example, in the future, if price comes back down here and I'm taking a short somewhere and I need a target, this could be a future target for me. Have volume imbalance. All right, so I marked that. Same thing. I want to just kind of see what the overall bias is on the weekly chart. So, you know, I kind of do that. See what we're doing. And then from there, I do the same exact thing on the monthly chart. And this really takes like no time every morning. Because, and actually, you know, the monthly, do it once a month. So we're in a new month in December. I mark the high and low of November. Boom, done. That's there for the whole next month. Because what's going to happen is anytime price is trading around that level, those levels, it will show respect towards it at any time. Like it'll always show respect, and they could be targets as well. So that's what I do. The monthly, previous month high low. Weekly, previous week high and low. And then if there's something noticeable like this, like a weekly fair value gap or a volume imbalance, something that I need to mark, like we had this weekly one, fair value gap. So if there's something I need to mark, then I will. And these I do lock, right? I lock them so I don't accidentally delete them, because whenever I'm done trading after every trading day and I'm done, I open up my drawings panel right here and I go and I trash all my drawings. And then whenever I do that, so for example, let me show you, I click remove. It'll ask me if I want to remove my locked drawings, and I put no, keep them. So everything is locked. I just keep them and I clear out everything I did for that day. So that's literally all I do on those three charts. Then here was a little bitty volume imbalance that hasn't been traded through. So things like that, because these higher time frames, if you can take a trade off of them or a trade to them, it's pretty good probability trades. That's what I like. I don't have to do that, but that's what I like. So after I do that, I drop down to the 15-minute chart, because this is where I get my bias for my morning, right here on the 15-minute chart. So let's go back to the morning. And you can see today, Wednesday, I mean, we just kind of went up. So at this, like today, this Wednesday, this is one where it's a little bit, there's not going to be a lot, right? So here's the open right here. So let's see if I can 9:15, 9:30 bar. That way I can try to make you not see any of this. So basically right here, or let's do this. Let's pull this all the way down, all the way over here. And let's make this as dark as we can. There we go. It still shows. All right, let's, can I go black here? There we go. Nice. It still shows a little bit, but so like, for example, this morning when I get on, I'm seeing from here to the left. I don't see anything that happened over here yet. So what I want to look at is I want to see what is the most obvious relatively equal highs and relatively equal lows, and define a range, a dealing range somewhere if I can. And then in between that range, mark out all of the 15-minute imbalances, which are the fair value gaps. So I would go, and this is 9:15, right? So there's no really equal highs. Let me zoom in a little bit. So we had some smoothness, and when I say smoothness, it's like this, where it's kind of smooth. It's not delivering like, let's see. This is delivering well. right? That's delivering well, or what, people would call a trend. Higher highs, higher lows, higher highs, higher lows. That's delivering, right? Delivering well. And then when you have smoothness, you're going to have something like boom, 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 boom. And then you'll have where it creates like this little bit of smoothness, right? And then what happens, you see this is kind of smooth. And then what happens is you'll see a wick or price just go like this. And it's either going to take this and drop, or it'll go up, continue to stay up here, and then keep going. So that's what I mean by smoothness, though. Okay, so I wanted to clarify that. So here you have a little bit of smoothness, and price went up. So that's what I'm looking for in the most obvious areas. But because we were already up here, price already took out the smoothness because it went up. So there's nothing to mark there. So it's like, okay, well, there's nothing else up higher on this 15-minute chart. So let's see if I can find any smoothness to the sell side. Well, this is a bit of smoothness here. It's not, and I marked this when I traded as a minor sell side liquidity because it's not extremely, I mean, it's obvious, but it's not something because overall I've been bullish. So it's not something that, and price was up here. It's not something I really thought was thinking that price would come down to, but you mark it because if price does go short and it starts running short, that's where it's going to go. So I mark, and this wick right here is the lowest point, but I typically, and usually price will run right through that to it or through this low point, but I like to mark a little bit. So this would have been my sell side liquidity. I would like to mark here because if price does come down and I'm targeting, me personally, I don't necessarily like putting my target on the opposite side if it's coming down because you just never know. And I've seen price get so close before and go away where even though it should go through it, nail the liquidity, right? Because that's the whole point. Liquidity should be resting under it. But so I want to make sure and get, I'm trading 20 funded accounts with multiple micros. So I want to make sure they all get filled. So I mark here, even though it'll probably come down to this point if price went short. Then that way I know to put my my target right above. Okay. So I would mark that. And then I continue to look. Is there any more smoothness? Not really. Not really. So the last pullback, you can call it, or low point would be here, right? Because we had this going sideways, shot down, and then ran up. So this would be my ultimate low that I'm looking at on this range from here, where we were currently, to here. And this midline here would be equilibrium, 50% of the of the market, of price at this current stage where it's at. Okay, so from this high that I just marked, this low, I would mark the 15-minute fair value gaps in between there. That's what I start marking out in between. So price was here at 915. So I'm gonna look. Let me zoom in a little bit so we can see. Let me get rid of this so we can see. So I'm going to look in this leg. Do we have any fair value gaps? No. Okay. Here. No. We have this little one here. And then there's one here. And then there's a little one here. So there's these small ones on this 15-minute chart, which tells me if we have multiple fair value gaps on a 15-minute chart, more than likely there's going to be one on the 1-hour chart. So I'll combine this right here all the way up to this. Okay. And I'll mark it as my 15-minute fair value gap. I have these preset and saved. So I'll mark that as my 15-minute fair value gap. And all these fair value gaps in between that high and this low, that's going to be what's considered our internal range liquidity. So what ICT teaches, right, is price moves to Liquidity and imbalances. That's where price is always attacking. Liquidity and imbalances. Imbalances are internal range liquidity. So if price, that right there tells you price doesn't have to go all the way to a sell side liquidity. It can reach into an internal range liquidity into one of these fair value gaps and then continue if price is going to remain bullish, if that makes sense. So I mark all of them in here. So I have this one, right? And then I keep looking back. This wick traded down here. So now I got to look back here, look back here. Okay, we have this little one here. And then some of this is going to be a little excessive, right? Because it's going to show quite a few fair value gaps. But, you know, I like to mark them because sometimes we see price just go. And if price, like, let's say, for example, price, the market opened and it ran through this fair value gap, I need to know where's it going next. Where, if it keeps going, where's it going to go next? Oh, and I'm sorry. So I marked this smoothness, but look at this as well. Right here, we have a little bit of, and I couldn't see because of this. Here we go. So we had price coming down, and we have this little bit of equal lows right here. This is relatively equal lows. This would be a really minor buy side or sell side liquidity right here as well. So I had this marked as a minor sell side liquidity also, and I'm going to remove this black thing here in a second. But after I show you everything I framed out. So this would be a little bit of a minor sell side liquidity, these relatively equal lows. Okay. Then I have this fair value gap, and I'll show you in a second. I'll go to the 1 hour and you'll see there sure was a 1 hour fair value gap there. Then we have this little bit of liquidity, sell side liquidity here. And then from there, mark this 15-minute fair value gap, and same thing here. Boom, boom, boom. This big fair value gap right here. Okay, mark that over. So this is how my chart looks like. I have all this stuff marked out. Let me all the way down to this low. So the next one, boom, nothing there, nothing there. Here's a nice fair value gap. I mark this out. And obviously this video is only going to take long. This only takes me like 5 to 10 minutes in the morning. But this video is going to take a little longer because I'm explaining. Okay, so then no more fair value gaps. We have this one, but price, this bar closed it right here, right? So I'm not too concerned about that. Then you have this low. All right, so now if we take, now if you look at it like this high, this low, this is where you're going to have, at the moment, if price goes down, where you're going to have some buy side liquidity, right? Because that's the last high. Then you have this low. And then in between, you're going to have those internal range liquidities zones with the fair value gaps, 15-minute fair value gaps. Actually, this one got closed. So that's my framework on the 15-minute. Okay. Let me get rid of this. Now I have that framed out. From there, I go to my 5-minute chart. And then what I do from my 5-minute is I want to mark the London highs and lows. Now, London is really from 2 a.m. to 5 a.m. And of course, everything I say time-wise is New York Eastern time, okay? Time zone. 2 to 5. But what I do is I go ahead and I mark the midnight right here, 0000, midnight hour to 5 a.m. And then I'm going to go and I'm going to find the low. And this is why I love TradingView, because it's so easy, it's so quick. I find the low between this vertical line and this one. And that's going to be my low. I'll mark that as my London low. And then here's my high. London high. And I want to see, because sometimes price is going to return back into the London range, and sometimes it's not. Whatever session you're trading, you want to mark the highs and lows of the previous session, just kind of as a reference point. And of course, could be targets. So then I get rid of these. Okay, now I have that framed out on my 5-minute as well. And let's see. I have that. And then, of course, I go to here. Let me slide me over. I go to the regular trading hours because I want to see if there's an opening range gap. Okay, I'm going to leave it on the 5-minute here. Regular trading hours. And then I see if there's an opening range gap. It's like, oh, there is an opening range gap. Okay. So the day before where the market closes, right here, this bar closed right there. Because there's an up candle. So it closed there. So that's going to be the low of my opening range gap. And then because it gapped up. So the market opened up here because it's a down bar. So it opened up, closed down. Market right here at the open. And there's the opening range gap high. Then I take my fib, put it right on both of those. So that way I can get the midpoint of it, which right here, 364.25, right there. Mark the middle, opening range gap right there. Now I can get rid of the fib and go back to my electronic trading hours. Now I have my opening range gap right there. What you could do as well, because you see how price never traded back, not even to the middle of it. If price never trades back to it, you can actually lock this one for the next day, because this one could be easy to forget to look for previous days, because you have to actually scroll back and look for it. So like, let me go ahead and lock this one here. Okay. So then I do that. I have that set. And also what I do is I'll go to the 15-minute. I have my own chart for this, but I mark out the new week opening gaps and the new day opening gaps. All right. So I have my own layout for this, but let's go to new day opening gap here. And what those are, it's very simple. The previous day, the previous night, you mark out where price closes and opens. Because the futures market, we know it closes at 16:45. Well, this is the 15-minute. It closes for an hour, right? An hour. Really from 1700 to 1800, right? So from 5 to 6 p.m., that's when it closes. The market closes. And you'll have a close and an open. There's not always going to be a gap. Sometimes there's going to be a big one. Sometimes there's going to be a small one. But what I do is I just mark right here the close of the bar. So I'll be right here. I mark it. I label it with the date, end dog, new day opening gap, high. And then right here where it opens. Kind of like the opening range gap, right? The open right here, boom, 12.4, end dog low. And that's it. I save it. And I keep them on its own chart. That way I can have all of them for like all time, right? These never go away because it's always respects them. It's always going to respect them to some level. And then, so that's the new day opening gap. And then there's also going to be the new week opening gap. So I have, again, my own chart for that. And all that one is the exact same thing, except you're looking at Friday evening, the close, and Sunday night open. So that's the new week opening gap. And I keep it on the 15-minute chart because it's just a little easier, so you don't have to scroll back so far and all that or whatever. But so like, let's look here. The most recent one, 12-1. We have right here. Let's zoom in, and sometimes you got to zoom in on them, and it's fine. We have Friday, 1300 right here. The market closed. Oh, up close bar right here. The close was right there. So that's going to be my new week opening gap low, because on Sunday night, when the market reopened, it opened right up here. So I marked that as my new week opening gap high. And those two, and I just save them, same thing. I have them forever for the new week opening gap. Because what these are kind of like magnets. The market will be attracted to them over and over and over. So like if I zoom out on this one, well, Might not be able to see it too well because we're so high in the market, but look how it just keeps respecting them over and over and over. I mean, they're great targets as well. Okay. So that part, and that's it. You can choose to have them on your trading chart. Ice-T says keep the last 5 weeks or the last 5 days if it's new day opening gaps on your chart. Those are the most powerful, but then leave them because they'll still respect them over time. And that's my framework. That's my framework. So now I have it set up where I can now take a look and see what do I think could happen. Okay, because now I have all my markings lined up. I have everything ready to go. My framework's set. And now I can analyze what do I think will happen. Okay, sometimes it's very obvious and sometimes it's not. Sometimes you have to wait. Sometimes you have to. That's why I typically don't really start looking for a trade until 9:50. Because it allows the market to manipulate or do whatever the heck it wants to do. Okay, so now let's remove this. So let me show you how I use this when I'm watching. So the market opened here, and when it opened, it just shot down, took this minor sell side liquidity right here. Okay, let me do this so you can see minor sell side liquidity. Shot down, took it. Look where it went to. Bam. Tapped that right there. Internal range liquidity. So you wait for a draw. And all-time high was just like right above. Like it went, or no, we were already above all-time high. We had already taken all-time high. So at this point, this was the highest the market has ever been. At this point, right here. Right? Ever. So where does it go from there? Don't know. But I did mention on my live stream that you can set deviations higher as targets, and it worked extremely perfectly. I didn't take a trade because I'm not doing those trades yet, but let's show you. Bam, nailed this. So look at how, I guess this is kind of a chart review in a sense. It nailed this, body closed up, and then the body never closed below this minor sell side again. Plus, I was bullish. Plus, we're at all-time highs. So a lot of times, oftentimes, when you get an all-time highs, I see price just continue up, right? So, but anyway, so that's all I'm doing, really. That's all I'm doing. I'm framing it out. Those are the only lines I'm making. And then you have to know, ICT concepts, the PD arrays, how to read it, and how all that works. So again, I've said this a million times. I'm not teaching ICT, how his concepts work, how to use it, because everybody can do it a little bit different and make it their own. Make it their own. This is just how I frame it out based on what I know with ICT. So, and what works for me. I frame it out and I wait. So I want to say the 2022 model is what I do, but that's what I learned from. And then I wait. And if you know where price is going and how price should react to certain areas, then you could trade it almost any way you want, as long as you know how the PD arrays work. And that's what I do. So like after I see it nail this 15-minute fair value gap, I mean, it touched it. It didn't, body closed up, right? I'm bullish. We're at all-time high. If I had obvious displacement and it kept going, well, then I always change my narrative. I'm open to taking a trade, short or long. Doesn't matter. Then it reached back down again, couldn't make it back down there again, and then continued up. So this is what I showed on the 1-minute chart. If I go back, here we go. So we were here, we reached down, came up, and basically I said, you can take this high and this low right here. And then you have your deviations. And I said, oftentimes, most times, if it's going to go outside of this and towards deviations, typically it'll go to the 0.5 deviation. So oftentimes, it'll go to the 0.25, which is this one. And almost every time it'll go to the 0.5. So I called this right here, this level 491 on my live stream. And look what happened. I mean, it worked beautifully. I called this move up, ran up, pulled back. We had a nice fair value gap here that we nailed right in here. Nailed it. Ran back up. Look at this. Right there, exactly to the 0.25. I mean, I'm sorry, the 0.5. Nailed it right there. Did all this. Came back up. Look at the bodies. Wicked up. The bodies closing here. Another little push. And then, look at that. The rest of the day. And then it finally broke through. And then made our all-time high there. So, yeah, that's, I mean, and it's simple, like, right? So, like, go back and watch this video and see how I mark everything. And I don't want the rest of the stuff I'm saying here to get lost in what I explained as far as what I look for. But that's, you still have to learn everything else, but that's really all I'm doing. It takes 5 to 10 minutes. I frame it out. I mark these markings, and then just studying ICT's 2022 mentorship, his core concepts on month 4, 2016 core concepts, month 4, where he just explains all his PD arrays. Great stuff. Yeah, and that's how I'm able to read the market so well. So, yeah, I don't want to delay this video, make it any longer than what it needs to be. It's really that simple. And if you start marking this stuff, what I would recommend, actually, mark this stuff out, learn how to do it, and then watch it. Give it a good week or two without taking a trade. I know that's hard to do, but if you give it a good week or two and watch how price reacts, that's what I did, though. That's literally what I did. And watch how price reacts. Start saying to yourself, okay, I think I'm seeing this minor sell sign. Let's see what happens when price gets there. I definitely see this. Definitely see this 15-minute, bunch of gaps here, right? So let me mark it out. Let's see. Let's see what happens. And then when you notice this, price shoot right through this minor sell side, tap the 15-minute, and the bars continue to close above this minor sell side. Maybe I'm onto something. Maybe it's working, right? So like do that, and you'll see. You'll start really catching on, and yeah, I think that'd be great. So, anyways, that's all for this video, because that is literally all I frame out every morning. Then I analyze and continue to read as the market's opening, as the market's going, and it's running towards these different areas, liquidity levels, internal range liquidity, all that. So monitor it and just watch how it works. So, all right, well, that's it. I hope y'all have a great rest of your day. Whatever you're doing, watch this on repeat, like it, share it, and as always, trade well, everybody.
Yeah.